Jenny's new buy, RHP, is Ryman Hospitality Partners. Tell me more. You bought it.
Okay, so oddly, this is exactly like your AMAT buy. We used to own this. We sold it a long time ago. I looked at it again about maybe 6 months ago. Fantastic company. And I said, by the way, 6 months ago, I said, if this happens to reach 92, just buy it, right? Everything's there no matter what the market's doing. The only way it would reach 92 would not be on its own merits, it would be on a market dislocation. So here's what they are. They own
the Grand Ole Opry?
Yes.
Oh, I love it.
Thank you. And the Ryman Auditorium. It's fantastic. They own 5 of the 10 largest non-gaming conference centers. So they own the National in DC, the Palms in Florida, Opryland in Nashville, and they've gotten beaten up because they're mushed in with hotel REITs. And they're very different. They have, like I said, non-gaming conference centers. So huge companies book out their corporate conferences. They book them out 2 to 5 years in advance. If you cancel, you're in trouble. It's trading right now with a 5.5% yield, really consistent earnings growth ahead of it. And you can look at a company like this. You don't want to look at the pandemic, that was too weird, but you can go back to the great financial crisis and say, all right, when there was a deep and sustained recession, a global depression, how'd they fare? And they fared okay. And you can stress test it and say, would they still be able to pay the dividend if we went through a scenario like that again? And the answer is yes. So sometimes you get to buy something really great in these markets, even though I think we all agree the market probably hasn't bottomed. This stock, I think, is really compelling right here. And you know what? It's already down 35% from its high. If it's down another 5 or 6 or 10% and I'm wrong and I didn't nail the bottom, I'm okay with that. This is a company I want to be invested in. It'll produce the income my clients expect me to. You want to go?
Well, I wanted to ask you, have you ever seen Jason Isbell live from the Ryman?
No.
That's the move.
Maybe I should
For due diligence purposes alone.
Yeah.
When I
should give you free tickets.
Book your flight. Do
okay,
it.
good idea.
So let's talk about this book.
Yeah.
Dividend Investing, Dependable Income to Navigate All Market Environments. Well, sure need it now, some are thinking. Tell me more. What am I going to learn from reading this book?
So I tried to write a book that was going to be actually very useful for people, where they could read it, and whether you're a dividend investor or not, you could learn about investment behavior. You could learn how to construct a portfolio, how to research stocks. The whole second section is actually a research process. The whole third section is toggles between stories of investments that I've made that have worked and investments that I've made that haven't worked. And they toggle between that also with client stories and say, here, this is how this client set up their portfolio. This is how another client came to it. Here's a story on real estate investing that worked and didn't work, and then why they decided to switch to equity investing. So I think it's useful. It'll give you something to think solidly about how to create a portfolio in. Yeah.
Who's going to play you in the movie? Can I say Jessica Chastain?
That's very sweet of you. You're very, very generous.
All right, Kevin, can you make some calls?
Yeah.
Okay.
Yeah. Right. I don't think anyone's going to make a movie.
I have a copy of this. I have a copy of this book. I already started going through it. You and I are going to talk about it later this week. I'm super excited for you. Congratulations.
Thank you.
So your
Thank
top
you.
3 dividend income picks, Kinder Morgan is Kinder Morgan, Verizon, and Bristol Myers.
Yeah.
Just quickly about those before we
Okay, sure.
before we go to break.
Kinder Morgan 4.5% yield, Bristol 4.5% also. Sorry, what was the third one that I gave you? Because I'm
Verizon.
Verizon. Sorry, I thought I gave you Conagra. Verizon 6.5% yield. What's interesting on these is you can look at where the revenues are coming from. And in the case of Verizon and Kinder, you have 100% revenues coming from the U.S. So you're out of the tariff fiasco. Bristol, you have 71%, but on Bristol, we know healthcare is being excluded. You can look at Kinder and Verizon and say, where are their cost of goods coming from? On Kinder, maybe some steel, right? Verizon, maybe some iPhone costs, but there's enormous economic insensitivity here, and there's, relative to the broader market, tariff insensitivity, and that's why I thought they'd make really good kind of top picks for right now. So they've paid their dividends for Verizon 40 years, Kinder 14 years, Bristol 92 years they've paid their dividend. Bristol's earnings look terrible, but they produce $10 billion plus of free cash flow for the next 3 years, so they can essentially buy their way to growth. It's nice because, and this goes a lot to the book, when you're buying dividend income stocks in an uncertain period like now, some portion of your return is certain. When you're buying a growth stock, which works great too, but different strategies, 100% of your return is uncertain. You might get a bigger return, but on dividend stocks, some portion is certain.
And all profits go to the Council for Economic Education.
Yes, where I'm on the board. Very
All
proud
right.
of it.
Congratulations on the book. Thank you for educating us and our viewers on dividend investing.